Thank you so much once again for meeting us. The first
Absolutely.
interview we did about flood insurance was so helpful. So many people reached out and said, "Oh my gosh, this is exactly what we need." So I'm sure you're going to be getting calls.
Yep.
And so this one obviously is top on the list of so many
Yeah.
people, fire insurance. This is,
And the non-renewals. The
yes. Oh,
non-renewals.
we'll get into all of that, but let's just go back to basics. I know we have a very short time, so we're going to go quick. So for those who are just walking into this market, moving to California, never even
Yep.
thought about fire insurance,
Yep.
tell us, what is fire insurance? What does it cover? What are the exceptions? What is it?
Okay, so really the better way to start with is I'm just going to go with just a kind of a wide approach. Homeowners insurance in California is obviously, as it sounds, it's insurance for a home, first and foremost. There's two major exclusions. I mean, obviously, all insurance policies have exclusions.
Yeah.
First is earthquake. Earthquake is a separate policy in California.
Yeah.
And as we mentioned on the last interview, flood is a separate policy.
Yeah.
So the best way of saying it, first and foremost, is a homeowner's by insurance code, an HO3 or HO5.
Okay.
If you were to Google, anybody out there Googles HO3 California, it will give you the breakdown. It's a homeowner's insurance policy. These are the policies that protect homes from a ownership standpoint for primary, from a rental standpoint for landlord, to short-term, secondary, all the different things. That's the category of homeowners insurance or landlord insurance.
Yeah.
Fire, it's really the big thing that you're hearing in the news right now, because fire is what's scary though. The funny part is fire is just a part of a homeowner's policy. And I get questioned all the time with regard to, well, does this include fire? Well, if it's an insurance policy and it's an HO3 policy, the answer is yes.
Mm-hmm.
It includes fire. The only time it doesn't include fire in the state of California is when you're required, because of no other really carriers being around, to be on what's called the California Fair Plan. That's the policy the state of California built as a last resort. So if every insurance carrier says, we're not interested, your fire scores are too high, and there's a whole host of things, we'll talk about fire scores in a second.
Yeah.
Yep. But if that's the case scenario for houses that qualify, because you have to qualify for the California Fair Plan, based on size and things of that nature.
Well, correct. So anything under, what is it, 2.7? Or
2.7 on the rebuild. And I am really, really trying to make sure I get this out here, because there's a really scary part of it. Right now, for those of you out there that are on the California Fair Plan,
me?
It's extremely important that you're insured to value.
Yeah.
And the reason for it is, unlike other insurance policies in California, there was a bill passed, AB 2756. Don't look it up out there. You don't need to. I'll tell you about it right now. Really, what it says is that you're required to be insured, and the key word is at the time of loss with the California Fair Plan, within 80%. So let's use an example. A 2,000 square foot house in Topanga.
Mm-hmm.
That's a common occurrence.
Yep.
Okay. It could be in Northern California. It could be anywhere in California, 2,000 square feet, and you're filing for the California Fair Plan. The big issue that you have to watch out for is the rebuild cost, and not the rebuild cost at this moment, but at the perceived time of loss. And why that's dangerous is we've seen in the past in major catastrophes, the rebuild costs have spiked.
Mm-hmm.
So if you have a situation, and for those out there, I'm still seeing policies come in from different brokers where people are trying to say it's $200 to build a house.
No.
There's no in California that is, I got to stamp that out. So everybody right now, if you're on the California Fair Plan, or just consumers in general, the thing I tell every consumer to look at, the very first thing to look at is cost. What is your rebuild cost?
Yeah. And maybe that's a conversation to have with your broker yearly, because people get policies and then they kind of stick to that same policy year after year after year. Well, 10 years ago, rebuild costs might be very different. It's time to upgrade.
5 years ago.
Yeah, of course. Yeah.
I mean, we've seen the exponential spiking of costs of rebuilds. I mean, in my lifetime never thought, I mean, we're seeing in some areas of California over $1,000 a square foot.
Oh, easy. Bel Air, typically 1,100 to 2,200 per square foot. You better
So
believe
think about that for a second
those
now.
are, yeah, those are different. That's a secondary conversation.
Yes.
So quickly, let's just cover what's happening in California,
Yep.
right? The state of
Yep.
the market, people, insurance providers leaving California, new products
Mhm.
like yours are coming in.
Yep.
Give us the
Yep.
landscape.
Well, right now, obviously, this is what's classified as a hard market, as they say. A lot of carriers have stopped writing new business and some have left.
Yeah.
The thing that I really try to make sure I spin at this point to talk to consumers about is I had one today. I had an advisor call me this morning on a meeting. He's up in Santa Barbara, as an example. And he goes, well, the only carrier I was told, the only carrier writing is this carrier. And I go, wrong.
No.
That's absolutely an incorrect statement. Even homes that are the really large homes in California, and we have a new program for those, have options. The better question is, what is the price? Everybody that's listening to this, California Fair Plan is an option. There are other companies that will write it. The question mark is, what are the best options for you as a consumer, and what's the best coverage to make sure you're set correctly? We very successfully have helped multiple carriers come into the market. We're working with several. We're working with several more to try to come in to really, push this forward to go, including launching a new program that we believe that will change insurance over time.
I know. I can't wait to get to that part. That's the juicy.
That's the exciting one. That's exciting.
Yeah. But before we get there, what about the wraparound policies? A lot of times people come up and say, well, okay, I'll get the California Fair Plan and I'm going to go get a wraparound policy. What
Yep.
are they? What do they do? What do they help
Okay.
with?
So going back to the California Fair Plan, California Fair Plan is based, there are some other parallel minors, but basically a California Fair Plan policy is a policy that's covering fire, wildfire and fire.
Mhm.
There's some other peripheral ones like vandalism or weird, but primarily it's that. What a wraparound is the street term, but a difference in coverage, DIC policy / wraparound is to fill in the other coverages of a normal HO3 policy. So believe it or not, a wraparound / DIC, the official term DIC policy, is still an HO3 policy.
What's a DIC? What does it stand for?
Difference in conditions. So most consumers understand a DIC as a wraparound policy.
Yeah.
The official term is a difference in conditions. And what that means is, as I mentioned to you, remember at the very beginning, the HO3 is the basis of a homeowner's policy in California.
Yeah. Mm-hmm.
What a wraparound / DIC policy really is an HO3 policy with a difference in conditions endorsement added to it that says that they exclude everything the California Fair Plan does.
So basically, the reason it's wraparound because here's your California Fair Plan, and here's everything else. It does not include this.
Yes,
and it can be done different ways.
It's such a problem right now because what happens is I get consumers every day that will come up to me because we're a managing general agency. So we appoint brokers to our programs and things of that nature.
I see.
And so what's really wild about it is I'll get a copy of a California Fair Plan, and the two dangers that always just drive me crazy is it's $200 a square foot because they have not reviewed it forever. That makes me nuts because they're in violation of that clause, right? They're going to get not paid on their money, basically, if they have a fire. And the second thing I have a really problem is consumers believe that the DIC, that wraparound, will also cover them in the event of a fire.
No, that's in addition to fire, like anything but fire is that.
So water damage, a theft loss, liability claim, a whole host of other things, because that's the big misconception. Because when a consumer uses the full coverage, the maximum you can have on the California Fair Plan for structure is 2.75 million. In
rebuild, right?
Yes, the rebuild of the structure.
So let me just back up here for a second, and this is for my personal benefit. Oftentimes, say I'm selling a home that's 3.5, like value
to buy.
Market value to buy is 3.5. Obviously, there's land involved, right?
Yes. So I was just going to jump in there and say there's a big, again, myth that we got to clear up. Insurance is based on rebuild cost.
Right.
It does not matter what the sale price of a house is. I'll use an example. In Malibu, on the beach, a 2,000 square foot house might cost $20 million.
It's still a certain amount to rebuild.
It's still only maybe $2 million to build. You're going to insure for that $2 million. Okay.
Got
A
Because
house
it
in,
doesn't burn. It's still going to be in Malibu. It's still going to be on the sand. You just got to
yep.
put a house there, and that's how
Well,
much it's going to cost.
and there's some areas of California that are upside down. What's called inverted land value. An example, like I just saw one in Lancaster. The house was a 7,000 square foot house. Okay, big house. Someone built it.
Yes.
The rebuild cost is probably about $3 million.
Astronomical, yes,
Yeah,
but the
3
home
million.
was, you know,
Two. That was like $1.5 million.
yeah,
And so there was well, a lot of consumers get confused over is, why is my dwelling coverage this amount? Well, it's this amount because it's based on the rebuild cost. So
correct.
rebuild cost plus land value equals the sale price.
Yes, or location, blah.
Yep.
Okay, so, well, since we're talking about the cost,
Mhm.
obviously that is a number one question for all consumers. How much is this going to cost me?
Mhm.
So yes, we know what California Fair Plan costs approximately. But what about other products? How is it
Yep.
calculated? I know there's a fire score involved. What is a fire score? Is it nationwide, like flood zone?
Every consumer needs to know what their fire insurance is, the key word. Insurance fire score. If you're listening to this and if right now you're listening to the two of us and you don't know what your insurance fire score is, you need to get it.
Yeah.
Because that's a really important thing. It's not something you can look up online.
Well,
It's
so
it's
that's
only
my
through insurance
question.
broker.
Okay, but does it vary from Allstate to California Fair Plan
No,
to, it's the same
no.
score. They're going by the
It's the
same.
same score. It's
Okay.
the same score. It's a third party that does the score. So it's the independent third party that does the score.
Okay.
It's a scoring of 1 to 100.
Wow.
One is perfect street, and I'm sorry to say 100 is gonna burn street. Okay,
Yeah.
so meaning extreme fire. And why it's important to know what your fire score is that basically this is what insurance companies look at.
Yeah. And you need to know, because then you know how to insure your investment.
Got
You're
it.
making an investment. It's real estate. It's,
What's the old story? The greatest investment most consumers ever have is their home.
of course, absolutely. I mean,
Yep. So having the fire score is important. Second thing is making sure that you have the right options, the right places. I do a lot of work for different business managers, different associations. I work with a lot of realty offices, and we're constantly trying to make sure people get to the right place, because insurance brokers are taught, hey, you show what your options are and make it. And as a general rule, you'll see a lot of brokers that's what they say. It's like, this is the industry. That's not the industry. There's no way. There's no insurance broker. I don't care how great they are, how sourced they are, what they are. There's no insurance broker that has access to every company.
okay, well, here's the question.
Mhm.
Sometimes you get these wildly different prices between different insurance, and
It's
to
400%.
right, and to a consumer who is not a broker like yourself or hasn't really been in this industry or even done research, it could be extremely overwhelming. So
Yeah.
what do you suggest people do instead of like just going to the neighbor, knocking on the neighbor's door and say, hey, who do you have for insurance?
I think that's a good idea, by the way. I've had consumers do that, and they come into me and say, hey, Robert, we heard about you and this new program and this and that. Just off that, I don't have a problem with, because I have more of a problem with an insurance broker that has a problem with that. Because really, at this point, there's no competition. That's a really big problem in California right now. In the state of California, most consumers are not going to find competition. 5 years ago, 10 years ago, as a realtor, you didn't even look at insurance. You would tell your buyer, who do you have your car insurance with, or who do you work with? Go talk to them and
right,
get the insurance.
true, but now it's a different situation.
I'm teaching realtors basically, such as yourself, what a fire score is and why do you need to know this and why do we need to get this and on listings in advance and how to protect, because it's terrible, but this is the way the market is right now at this point.
Real quick, before we go into product that you brought in,
Yep.
which is really interesting, because in our market, we are getting into these kind of price points where this is going to get
Yeah.
crucial and it's going to change the market. But a quick question that one of my colleagues brought up, like, what is the best way to catalog all your stuff? Like, do we have books of like, oh, here's my flat screen TV, here's my Tesla charger, like what?
Yes.
Yes.
Actually, one of the things I've done, and I think it's really kind of unique, I've had consumers, there are companies out there that you can pay to catalog things. The problem is that is as good as the moment they catalog it.
Right, and then it evolves. So what do you do? Like, what do
Yeah.
actually people do? What have you seen?
What I recommend to consumers, well, first of all, there are some things that you have to specially schedule, fine arts, jewelry, things that are needed to schedule. So I'm going to throw out the normal house. I mean, anything that's supposed to be scheduled needs to be scheduled.
Right.
So I'm talking about, to your point, a TV, couches, things of that nature. The easiest thing to do, we all have iPhones now.
Yeah.
Guess where an iPhone generally is?
A catalog
On you.
device. Yeah.
It's a catalog device.
Yeah.
Walk in, turn the video on.
Folder. Yeah.
Or and you can do it that way. You can just do videos of it every so often, doing a video of
And
it.
will
I think that's one of the great things.
Will that stand up in the face of
Yes.
disaster? Okay.
Yep. Yep. And why it's really good too is that phones are generally backed up to the cloud, especially like an iPhone or Androids are backed up to cloud. So even if your phone was lost in the fire,
True.
you can go into your iCloud, get a new phone, download the videos and things, and then show the adjusters.
If my phone is lost in the fire, I'm lost in the fire because this thing is never out of my hands.
Yes.
That's not gonna happen.
Well, you and I are very similar that way, but there are some consumers that don't, as I always say.
Yeah. So one last question,
Go.
that, basically, how sometimes different insurances require the homeowner to do different things, like, oh, trim all the vines off this building. Oh, 10-foot non-flammable area around the home.
That's yep.
Is there a standard that the homeowner can follow? Because some of it sounds really ridiculous. Some of it sounds
Yes.
excessive. Where's that standard? Where's that gold standard? And when do you know that this particular carrier is asking you to do too much?
Okay, that's a great question. What it is actually carriers right now are required to fall under what's called lean, clean, and green. So all of you out there, if you go to the lean, clean, green. If you go to the Calfornia Fire, on their website, if you go on their website, there's a section where you can do lean, clean, and green. It gives you the entire breakdown of what is for compliance. That's what a consumer needs to do. So a lot of the admitted carriers right now are required to allow consumers to get within lean, clean, and green.
Got it.
So, and that will get you renewal. I have helped more clients right now. I'm sorry to say, or consumers, I walk them. I've had people ask me to walk them with them. And I'm like, okay, you got to put this in a pot. This can't be here. This has got to go. This tree's got to be turned back, and things of that nature to get them lean, clean, and green. Because the alternative can sometimes be 10 times the cost.
Right.
So they had a policy with a carrier. Yep.
Yes. Okay. Well,
so,
since I know we have very little time left, tell us about this revolutionary program.
Yep.
I have a cheat sheet on, which is amazing. Thank you for doing this for us.
Absolutely.
Tell us a little bit more about it.
So being in the insurance business for 25 years, I have been in fire for the last really 10 to 15 years, bringing products, working with companies. We were very excited to launch what's called an MGA, a managing general agency. So we appoint insurance brokers to sell our products. We have built a product that we believe is going to start at this level, meaning it's a basic qualification on size, but trickle down over time, meaning insurance carriers are going to mimic what we're building. It basically is the first policy in the history of California that we know of that is fully transferable from sellers to buyers.
Wow. I mean, that right there, because how many buyers ask, well, who do they have for a carrier?
Yep.
And, oh, well, they have State Farm. They don't write anymore.
Yep. Fully transferable. Second thing is we're building it in a way to reverse coverage. It costs over time. So it would be a whole hour. We could do a whole seminar on that if you want to.
We will.
But this is the Cliff Notes, as they say, right? The old Cliff Notes.
Yeah. So
what it is it is for larger homes. The reason why we stepped into the market with the larger homes is, believe it or not, the larger homes across California are the ones that really are without coverage right now, or really out of control.
Of course.
And really what it comes into, believe it or not, is the rebuild cost. As I mentioned earlier in this, the programs, really there's a cutoff at 4.5 million for the main structure.
Right.
So houses that are below 4.5 million have a lot more options than the ones that are above 4.5 million. So this new program is over 4.5 million for now. And I'll use that word now.
Applies to 90% of inventory in Palisades, Bel Air, Brentwood, etc. Yeah.
Oh, absolutely. And I mean, because now that's kind of the range of, when you're talking about $1,000 square foot, that's a 4,500 square foot house. 5 years ago, that might have been a 7,000 square foot house.
I know.
So why it's great is we're able to reverse the trend. It's built on a really great concept. Anybody that's interested, we are appointing insurance brokers, but we can actually talk to consumers directly with this new program. It's a great farming tool for realtors. I always say, I like to talk about this because everybody needs to understand that this program is there. Not only is that it's there, but we collect, and I use the word we. This is not us bringing a product to market and we're trying to help consumers as much as we are. We all need to work on this to get this program, to be completely successful as we've launched. And the reason for it is these changes will change insurance for the better in the future.
Across the board, yeah. No, and this is why I'm doing these interviews, is because I can bring this to my audience and kind of put this into their line of vision. It's like, hey, there is a solution. Don't give up. I mean, I have friends and clients who were not insured during a fire because they were living in a larger home in places like Bel Air, and the insurance was practically not available. And
or it's available and it's $400,000.
Right. And so this program is able to bring it down from 3 to 5% to 1 to 2% off the insured value.
It's a half, it's a third. And it's getting really staggering for the really big homes. It's staggering on the bigger numbers.
Who wouldn't want to protect their $20 million investment if it costs them 1 or 2%?
Right? That's the thing. I think in the past we would have saw some pushback, but those same consumers are getting 4 and 5% renewals. So now that when they get the 4 or 5% renewal and we're at 1.5%, it makes us look great from that standpoint. And it's going to reverse the cost over time to bring it down.
Oh, yeah. Tell me about that real quick. What do you mean over time bringing it down?
Well, the way the policy is constructed, it's built on a phase concept, 100 homes perfectly spread out across California. So that's one of the two things that what knocked the insurance companies out. Proximity was one. A broker like me, before I became an MGA, would get access to a market and put 20 homes on one street. Well, what happens when a fire rolls through that street? I knocked an insurance company out.
Now we're
out. That doesn't happen with this program. The insurance companies love this because it's spread out perfectly. There's some internal coverages differences, but overall the policies are better than what they are in the market.
Does it mean that over time, this particular property's insurance costs will continue to come down?
Yep. The way and that's a whole class for a different time. I can go through and explain it. But it's the way we built this, and it's kind of neat for everyone out there to know, because my name is again Robert Feldman. You have all my credentials and you'll put on this for you to reach out. But this program is almost, we have the analogy, being fully transferable. What does that do for a real estate professional? Having a fully transferable, what does it make the value of a house?
Oh my gosh, it makes it sellable. It eliminates the headache and stress during escrow, and it makes this home that much more desirable compared to another
right next door
street that doesn't have that.
So these are why we built it this way. And so we built it this way because obviously doing it for 25 years, I've been in the field. I know what works and I know what doesn't work. I actually won with all the Lloyds of London, all the different carriers that are coming in on this. They never thought we could get it put down to 1.5%. We used their analytics company and it came in incredible. And it's just, long story short, it's such a buzz right now. We've got a lot of insurance companies just based on this program that want to come back to California based on these criteria. That's why when we make this successful on the larger homes, your friends in Bel Air and different places, it's going to trickle down to, it's going to, the trickle down effect of it, it's going to work incredibly.
That happen. We want to bring that to
all the way down. So super excited.
So much. And obviously there'll be more questions. I'm sure you'll be flooded with questions from our
and it's a great thing, and we answer every one of them, guys. You follow us on the different things. You guys can ask us questions through our website, through different places. My personal cell phone, I give it out. It's 818-415-8000. If this is really a concern, call me, because I really think it's important for consumers to really know the full picture right now. It's most important.
It is. I mean, especially in the changing market, changing climate, Yeah,
You know,
we need to be prepared. I mean, knowledge
exactly.
is power, right? Why hide your head in the sand and not know your fire score? You better be,
Oh my goodness. You got to know it. You got to know what your options are. You got to know what you're looking at.
yeah. Thank you so much.
Thank you. And I'm looking forward to, if you want to do another one, we can obviously do one just based on the how that reverses costs. There's questions regarding earthquake. We're always around for anything you need for any of the subjects you want to talk about. I've got,
Great.
the joke is insurance right now, there's probably 25 more subjects we can talk about. So
Yes.
always around.
Well, when when your price point gets to a certain point, like you got to protect it.
Got to. You have to.
You got to protect it. Otherwise,
Well, then why are you investing in it?
exactly.
You don't buy an investment
I
and
mean,
have.
it's real estate for a reason,
Yeah,
You got to
very
ensure.
good.
All right, thanks.
Thank you so much as always.
For that barbecue. When are you coming with the barbecue?
Actually, it was funny. You're gonna have to go after. You missed the last round.
I know.
That's
I was busy. I was working.
you. That's a good thing. I can always catch up with you and get your barbecue. I think we're about due to come back around, so we'll have to figure that out.
Awesome. All right. Thanks.
You.